Ian, it's really good to meet you. You've passed a 5K instant funding on the level 1, you're moving up to level 2. You've absolutely motored through it as well. In just sort of 2 or 3 weeks from the beginning of March, a 10% profit target, $501 in profit, and your consistency scoring is absolutely outstanding, 14.89% on this level 1, well under the 20% threshold. First up, before we get into the account itself, how did you find the experience of trading our new instant funding account?
It was great. I mean, I've tried a couple other different instant funding accounts before, but this one was the best availability, and I like the scaling. The way that works is a lot different than a lot of firms, and I think that will help later on because of the drawdown factor. Because that gives you that little bit extra room every time you scale. Everything about it has been great so far. You guys have been great. I haven't had any problem with the platform. I haven't had any problem with execution or anything like that.
That's fantastic. And you've been using TradeLocker. Now, I know that I get the impression that you've been trading for quite a long time as well. So what is the reasoning behind the choice in TradeLocker, and how have you found TradeLocker?
Now that I've used it more, I like TradeLocker a lot for the execution and the ability to set. So if you want $1 value for your stop limit and your take profit, so you can keep whatever average you like, that's what I like to have, which is hard to do on an MT5 system. You know, you can't just type in $10 and that's what you want for a drawdown or whatever. So I do like that.
It's a really nicely put together trading platform, and it's becoming more and more popular to use. And so from a prop trading experience, there's obviously no issues in that. But the actual account itself, you've passed this account. I mean, you do a lot of gold trading as well, but you've also got a whole basket of different currencies in there as well. Euro against the dollar, you some Bitcoin as well, the Australian dollar against the dollar. You've got the dragon in there as well, the pound against the yen and the dollar against the yen. 170 trades, which is around about 10 a day over the course of the duration of the account. Just give us a bit of information about why you are trading those particular types of assets, and what is the reason for those choices?
A lot of the times for me, I only get 2 or 3 hours during the run of the day. So I have to pick a high volatility point. I find with gold, that's something that you can trade early in the morning or in the afternoon or at night and still have the volatility to pull it off. During the morning, of course, that 8:30 session, the Euro USD pair is the one that I trade the most until about 11:30 or 12. And then I usually take a break through the afternoon until the next session starts for the GJ pair. And I'll play that for a little while, or I'll wait until gold opens up and I'll trade that for a little while. I like the Aussie USD pair. I'm waiting for that someday to come back into that 66 range, but right now we're just stuck in that 63. So I'm just kind of waiting on that to get a little bit higher, hopefully over like the 64 range, then maybe we'll see some movement. Those are really the big ones that I do a lot. I don't trade crypto a lot just because of the whales that come in. I do set my stop losses every time, but sometimes it's just unpredictable. You get some of the humongous institutional movements.
That's really interesting you say that, actually, because a lot of the guys that I've spoken to in other interviews, they say they actually like crypto because the fundamentals are a little bit grayer and there's less sort of computer algorithms working on the price action. So technically, you tend to get a market that either gives you the result that you're looking for or stops you out in a relatively clean amount of time. There's no sort of like messing about or really obscure kind of price action that you get in some of the more complicated assets. So that's interesting you say that the whales that come along in these crypto markets, they put you off. So it's a volatility issue that you find problematic, yeah?
Yeah. Like with gold, I've trained myself how to get through that volatility. And of course, as you watch a pair for so long, you learn the levels, except for right now where things aren't really predictable. But and being a technical trader, that helps me. That's why I stick with those 3 or 4 pairs most of the time, is because I know where the levels float generally during the run of a year. That's why I picked those.
Yeah. Well, let's like dig into your trading style then, because you are an intraday trader and you are a very successful intraday trader. So the way that you've built this account and the way that you've passed it with the scoring and the rules, working intraday, shows that it is possible. Your style, just deconstruct your style, and not only that, but how you've managed to master the style that you've got and drive it into an intraday type of time frame.
Well, like we talked about, I've been in the market since 2008. And then when I first started learning how to trade, I had done those penny stocks and doing snipe trades. So that's what got me used to that initial volatility and learning the break levels and the support and resistance levels, along with keeping an eye on volume and times a day and that kind of thing. And then that's what got me used to the volatility, and that got me into doing Forex. And one of the first pairs I traded was GJ and USD JPY, my first year of trading. So that was interesting to try to work through that.
An education.
And eventually I just gave up. Yeah, I just gave up trading the JPY and went into a little bit of a slower market. I was in the pound for a little while. I did that for about a year until I finally transitioned into the Euro USD pair and started that function.
And what about the actual style that you've got? What are the techniques that you use? How do you see the market? How are you picking the spots of interest? You mentioned briefly about key levels, and you're right. The more screen time that you get, the more you get used to the way that any particular price action works. And every market does feel differently once you spent a long time with it. But in terms of your style, your strategy, how you're actually picking those spots, just deconstruct that for us a little bit.
Sure. The way I profile things or do my analysis, I start with a 1 day. I find my support and resistance levels for the extremes of that day, and my important breakup structures, my previous day highs, previous day lows, and then I take a look at the volume profile to see where my key interest points are, and I'll mark those off. So I kind of have an idea of where I'm going to see a big sell or where I'm going to see a big buy at the very bottom of the extremes. And it is a patience game because you have to wait for that to get to that point. But that's what I like about this strategy. And that's why I'm glad I learned the breakup structures and the change of characters and that type of thing, because it gives you a better visualization of where everything is, as opposed to just going in blind or trying to use a moving average. For me, when you have the spikes, that's what would throw me off. Like if you were doing a swing trade over 3 or 4 days, I would use the moving average and fibs. But I found myself not to be as successful as just doing the short 15, 20, 30-minute trades with smaller trades but bigger lots for essentially smaller trades. So instead of carrying long trade with like a smaller lot size, I pick a larger lot size and do the smaller bursts, and that's how I pick up my like if you look through my chart, like I'll have little pops, and that's how I build up my account through and just keep my drawdown to a certain percentage. Like I try to keep it under $20 if I can. Like yesterday was an off day for me. I was trying to trade through speeches and that kind of thing. That was my own fault. And I did end up hitting a couple stops, but that's just part of trading. Just 1 day out of 4 that didn't go that well. Tried to recover some of that this morning, get back on my feet, get back things the way things are going.
That's really interesting. That there's I love what you said there about, because everybody goes through their own progression, And it's a question of arriving at something that fits you and works for you as a technique. And what's interesting there, where you said about using moving averages and Fibonacci retracement tools and stuff, you stick those on the chart and you stick those orders in, and you watch the price fill you, and then you get stopped out left, right, and center. But it sounds to me like the way that you are working your price action now, you've arrived at that because you feel you have like a more of a sense of control over the precision of your entry. It's just a question of them waiting for the market to come and tag those key areas that you're working with.
Right, exactly. That's essentially what I do. I wait for those key points to hit, give it a couple minutes, maybe wait through a 3 or 5 minute timer to see where the bars are going to go, see if I get that double bounce or if I have any kind of structure forming. And that's, I try to wait through that for a couple of minutes to see what it's going to do, and then decide if I'll take the trade for that short time period. Just, it might only be 10 or 15 pips at a time, but that's where you kind of implement that larger lot size just for that small time frame. I think what gave me the idea for that was trading Bitcoin as like a binary option, where you could use leverage for those high moves, but you might only take a 30-second move or a 1 or 2 minute and get huge gains out of that. So I kind of transferred that into Forex trading with the same idea: smaller moves with bigger lots and keep your risk low.
Yeah, and then when you are then identifying those key areas, what is it a question? Are you sitting patiently waiting for it, and then are you jumping in at market? Have you've got all of that methodology all pre-worked out? You know where you're wrong in the market. You know where your stop loss is going to be. Are you jumping in at market, or are you placing all of the orders across the structure of your analysis and then just standing back and letting the market play out?
That's where my morning analysis comes in. I'll set all my levels so I know what I'm going to look for to see. I usually try to trade off a 4 hour. Usually, for me, that's safe, and I don't know if that will work for everyone, but when I hit about, especially on gold, sometimes you hit those 4 hour marks, you've got a pretty good push one way or the other, up 15 or a 30-minute tick. So you're going to have a bullish run for a little while. And that's what I try to base off, and then I'll break it down into like a 1 hour or a 15 or a 5, and then pick up small burst trades just off that 5-minute chart.
Yeah, well, it clearly works really well, and it's really nice to see someone who's mastered that art of intraday trading to such a level that you're able to very smoothly, with precision, get into the prop space. And because at the end of the day, it's all about managing risk, and what is clearly demonstrated with that kind of an equity curve, we can see the equity curve on the screen at the moment, is just how measured your approach is to managing your risk, which is obviously a testament to the years that you've got in the market. And that is what trading is all about, arriving at that place where you reach that peak performance, and you're at one with yourself, you're at one with the market, and it really comes together in one body of work. What would you say, if you could just give me gems? I'm fascinated to know, because I've been trading a long time as well, and I'm always fascinated to speak to people who've got a lot of experience. What kind of lessons do you think over the years would you describe as being, okay, that was a hard-won lesson?
Trading through news. that was always, that's always a beginner mistake, because for me anyway, because you want to gamble, because you see all these things, and that's one of the hardest parts about trading for me, was like, it's not a gamble, it's a slow and consistent thing that you have to build every day, instead of, you don't just jump in and be like, oh, I'm going to make $1,000 today. It just doesn't work that way. It'd be nice to say it worked that way, but if you get, for me, during a prop, especially like a 5K, I tried to average $50 to $75 a day. And that way, if you had a bad day, it didn't kill you, and you could recover it the next day. And that's how I slowly built. But that gives you a nice smooth equity line through. You don't have those huge spikes up and down. And I feel like a lot of firms will look at those spikes and not necessarily, I wouldn't say frown upon, but I would feel like a lot of firms would see that as like a gamble, as opposed to a consistent trader.
Yeah. Yeah. See, because as soon as you're trading on margin, any volatility in the equity curve when you've got the application of leverage on unknown quantity events, especially with poor risk management as well, is always going to give you a very ragged equity curve, and it can look and come across like gambling. Just out of curiosity, because you've mentioned that about avoiding key news events, how do you, in your analysis, how do you define what is a news event? Because news is happening all the time to various different degrees. How do you then define when to avoid it? Is it just red news events in the calendar, or is there a little bit more sophistication in there?
Well, usually it was always red news, but this year seems to be like, I don't remember speeches being quite this volatile. Mm-hmm. Maybe I'm wrong, but this year has been different as far as speeches go. So even the orange ones I'm taking fairly seriously. I usually wait I try to wait at least 5 minutes after the initial news release, because that way you skip that initial burst and you can kind of see if you're going to do a retrace or what's going to happen. So that was a lesson learned in news trading.
As the market fundamentals move forward, a shift in emphasis happens all the time. I mean, we've been looking at some analysis this morning for our weekly analysis thing that we do, talking about the copper market. All of metals is just absolutely just 30% rally over the course of this year. That's a Trump thing. That's a Trump story. That is an inflection in the market that's underneath all of the price action that's driving the bigger picture. And you're right. So that in itself shifts. So it's not necessarily just those individual news events. I mean, the market can put a lot of emphasis on CPI in one quarter, and then it's more focused on jobs the next.
Right. Yeah. And I think everybody's really going for a safe haven right now, because we're seeing that gold and silver, like 34 or 35 today. So that's gone up tremendously in just a matter of 2 weeks. I think we went from 31 to 34. So that's one that I've been watching. And copper, those are all really busy currencies right now.
Yeah.
Metals.
Big movers at the moment. Well, listen, I really, really appreciate you having a chat with us, Ian. It's been fascinating to hear your story and how you've managed to do it. Absolutely. I salute you, sir. Really, really outstanding job on the account. Beautiful consistency score. And it's great to see some guys like yourself on those new instant funding programs showing how it's done, and your experience and your expertise clearly comes across. And you are now got that next level on the instant funding. And we're very, very pleased to have you with FTUK, and we hope that continues for a long time. Really appreciate your time. Thank you.
Sure. Yes, thank you very much, Nick. I appreciate that. It's been a pleasure talking to you.